You know that cup of coffee you grab every morning? Ever stop to think about what it really costs to make it? Not what you pay, but the actual nitty-gritty cost? Well, that's a huge question for any business. And today, we're going to break it all down using that one simple cup of coffee. Seriously, take a guess. How much does it really cost to make, well, anything? It sounds like such a straightforward question, right? But believe me, the answer is way more interesting and a lot more complicated than you'd expect. So, to really get our heads around this, we're going to follow the journey of something we all know and love, a cup of coffee from your favorite local cafe. That's going to be our mission for the next few minutes, to uncover every single penny that goes into making just one cup. All right, first things first, we need a little bit of lingo. In the world of accounting, whatever it is we're trying to find the cost of, that's called a cost object. For us, right now, it's that single cup of coffee. Simple as that. Every cost we talk about, we're going to trace it right back to that one cup. Okay, so to find that true cost, we have to become detectives. We're looking for two kinds of clues. The costs that are sitting right there in plain sight and the ones that are kind of hidden in the background. In accounting speak, this is the big one. The difference between direct and indirect costs. Direct costs? They're the no-brainers. You can literally point to them. Think about it. The coffee beans, the splash of milk, the paper cup itself, you can see them going right into our cost object, that one cup of coffee. But then you've got the indirect costs. The shop's rent, for example. I mean, it's totally essential, right? But how much of this month's rent belongs to this specific cup? Yeah, you can't just draw a straight line. It's trickier. And this right here just lays it all out. See how direct costs have a nice, clean line? We can trace them straight to the coffee. But the indirect costs, well, they have to be allocated. That's just a fancy way of saying we have to figure out a fair system to slice up a big cost, like rent, and assign a tiny piece of it to every single cup the shop sells. Okay, now that we know about direct and indirect costs, we can start sorting them into two big buckets. Let's start with the first bucket, which is all about the making of the product. These are what we call product costs. And this making bucket, or product costs, has three main parts. You've got direct materials, that's the physical stuff, the beans, milk, cup. Then there's direct labor, that's the person actually making the coffee, the barista. And finally, you have this big catch-all category called manufacturing overhead. This is where all those other production costs go, like a piece of the cafe's rent or the cost of the espresso machine slowly wearing out over time. So that's bucket number one, everything that goes into making the coffee. But what about everything else? All the other costs a business has that aren't part of the physical product? Well, that's our second bucket, period costs. You can basically think of these as the costs of selling the coffee and just running the business in general. Yeah, see, unlike product costs, these expenses are never actually in the coffee. They're tied to a period of time, like a month or a year. We're talking about things like the monthly marketing budget or the salary of the person who does the books. So for our little coffee shop, this is stuff like running an ad on Instagram, paying the accountant, buying paper for the office printer, and even the salary the owner pays themselves. All of those? Yep, they're period costs. And right here, this is why this whole distinction is so incredibly important. Check this out. Product costs, the making costs, they don't immediately count against your profit. First, they become an asset on your books called inventory. They only turn into an expense and reduce your profit when the coffee is actually sold. But period costs, they skip that inventory step entirely. They hit your bottom line as an expense right away in the month they happen. Okay, we've sorted all our costs into our two buckets, the making costs and the selling costs. Now comes the really fun part. Let's put this all together and see if our little coffee shop is actually making a profit. So just to recap, we've got our product costs bucket and our period costs bucket. Let's see how these two flow through the business to get us to that all-important profit number. This diagram really tells the whole story. You see, it starts with the raw materials, the beans. Then, as the coffee is being made, we add in the labor and overhead costs. When the cup is ready to go, its total cost sits there in what we call inventory. And here's the key moment. Its cost doesn't become an expense until someone walks up and buys it. At that exact moment, it becomes something called the cost of goods sold. All right, let's do the math. It's actually a pretty simple path to find the profit. Step 1, you take all the money you made from sales. That's your revenue. Step 2, you subtract the cost of goods sold. Remember, that's all our making costs for the coffee we sold. What's left over? That's your gross margin. Then, from that number, you subtract all your selling or period costs. And voila! What you have at the end is the grand prize, operating income. Now let's pause on that gross margin for a second because it's a really, really important number. It basically answers one question. Is the price you're charging for a cup of coffee even covering the cost to make it? Because if your gross margin is negative, well, let's just say you've got a big problem. You're losing money on every single cup you sell. And that, of course, brings us to the bottom line, the number everyone really cares about, operating income. This is it. This is the real measure of how profitable the business is from its main job, which is, selling coffee. This is what the owners actually get to take home, so to speak. So you might be thinking, okay, cool, but I'm not an accountant, so why should I care? Well, here's the thing. Understanding this stuff isn't just for the number crunchers. It's one of the most critical parts of running a successful business, period. Because think about it. When you really, truly understand your costs, you can make way smarter decisions. How much should you charge for that coffee? Well, you can't know without understanding your product costs. Need to cut back on expenses? You've got to look at your period costs to see where the money's going. Thinking about adding a new muffin to the menu? You have to run all these numbers to see if it's even a good idea. So there you have it. We've peeled back the layers to find the real cost of a single cup of coffee. And knowing that cost, that's step one. It's the foundation for everything. But it naturally leads to the next big question, doesn't it? Once you know what something costs, how do you control it?